Okay, and welcome back. This is the final segment of our course today. It's going to be on analysis of financial statements. And before we get started, I'd really like to make an important point, and I can't emphasize this enough. Not only will this segment cap everything that we've just learned and provide you with the ability to look at financial statements, interpret them, understand them, gain insight, and analyze them. But I think equally, if not more importantly, it's going to give you the ability to ask great questions. You can't always find out what's going on in the operations from the financial statements. Yes, they give you an overall picture of the financial condition and you can see some trends, you can get some analysis, but a lot of times you need to ask questions. Well, what's behind this number? Why is this happening? And that's what this segment's going to do for you. It's going to provide you the ability to ask great, insightful questions, which is only going to really enhance your stature among your peers and your fellow workers. So Einstein was asked once, if you had to solve a problem in an hour, what would you do? He said, well, I would spend 55 minutes trying to find out what questions to ask, and then 5 minutes to solve the problem. And in a similar way, that's what we're going to be doing today, trying to figure out, what questions should I be asking? So there are 4 methods of financial statement analysis. The first is called the horizontal analysis, vertical analysis, followed by common-sized financial statements and trend percentages. Now, these are mom and apple pie. These are the basic bedrocks of how we look at financial statements and analyze them to get a basic understanding of what's going on. We have more sophisticated modeling and things we can do. We'll get into that in intermediate and advanced accounting. So let's take a look at them one at a time. Horizontal analysis, as the name implies, looks at a time horizon. Okay, it's using the comparative financial statements to calculate percentage and dollar changes from one period to the next. So from month to month, year to year. The vertical analysis, again as the name implies, is a single financial statement that is expressed as a percentage of a significant total. For example, looking at our sales to our total revenues, or looking at our cash to our total assets, and then expressing that as a percentage of the total. So it's basically showing what our asset, liabilities, and owner's equity, what our mix is in our revenues and expenses. Common-sized financial statements is basically just turning everything into a percent, no absolute dollars, and it's just trying to see what the relative changes are from one item to another. And then finally, the trend percentages, and this is showing the change over time for a given financial statement. Okay, so this can be done not just from year to year, but usually over a trend of maybe 3 to 5 year horizons. So let's jump in and take a look at an example. And we have here an example of the Clover Company owns and operates 5 hotels, 10 golf facilities, 3 golf retail outlets. So it's a pretty big operation. And they provide you with comparative balance sheets of the years ended December 31, 2019 and 2018, expressed in, and this is, I wanted to bring this up, a lot of times financial statements are just not on absolute dollars, but this particular one is going to be expressed in thousands. So when we look at the numbers, the numbers will actually be in millions. They look like they're in thousands, but we have to add 3 zeros to it, and I'll show you that in a minute. And the management has asked you to prepare a horizontal analysis on the information. So let's just dive in. So here's our basic balance sheet. We're just going to start with the assets section right here. And again, as I mentioned earlier, these numbers right here, these are in millions. So this is 12 million because, again, the whole statement is expressed in thousands. So we're looking at what is the position of the assets, and we're looking at 2019 versus 2018. So this is what we have to look at. We can see that there seems to be some reduction in total current assets, but we see kind of a gain in overall assets. And let's just take a look at how this works. So in the horizontal analysis, the dollar change will equal the current year minus the base year. Now, I know that seems simple, but some people can get a little confused on this. You want to make sure that you're always taking it from the base year. And in this case, it's going to be 2018 as the base year. So the current year, 2019, minus 2018 as the base year. So to convert that to a percentage change, we would take the dollar change from, again, the current year to the base year, and then we divide it by the base year and then multiply by 100 to get our percent. So it looks like this. So in this case, we have our 12 million in 2019 minus our 23,500,000 in 2018 gives us 11,500,000 decrease in our cash position. And if we were to express that as a percentage, that would become 48%. So now what we're going to do is we're going to look at the entire asset section of this balance sheet, and we can see right here that we have, again, the big outstanding one. We had a big decrease in cash, while we had a big increase in prepaid expenses. It really was relatively not that large. We can see here that our accounts receivable has gone up, so something else is going on here when we look at our total current asset position, and we can see here, wow, we had quite a big increase in our buildings and equipment. So even though our current assets went down, our total assets went up. It looks like they bought some either equipment or buildings or both. So let's take a look at a little bit more. So let's apply the same procedure now to the liabilities and the stockholders' equity section of the balance sheet. And again, you can see here that payables went up and notes payable went down. And we drive on down, and the really big story here on this, we can see not a lot of changes going on here, but our total liabilities went up a little bit. But this is the really good news. We can see here our retained earnings, again, that comes from our operation, was up. So when we look at the total kind of financial position just from this point of view, we can see that they've paid down some notes. Okay, that's pretty good. Bonds and notes payable went down. We can see from the previous slide that it looks like they acquired some equipment. And of course the question, okay, what do we do? What do we buy? We obviously bought something. Why is, our cash is down, our fixed assets went up. Let's find out what's going on and then tell the story. And again, financial statements are just like reading a storybook. It's telling a story. We just need to convert those numbers into that story. So now let's apply the same thing to the income statement. If we look at this, we can see that our sales are going up, but we can see our net income has gone down. There's our sales, there's our net income going down. So what's up with that? We can see we had sales increases by 8.3% while the net income decreased by 21.9%. That's not a good formula, ladies and gentlemen. So we want to see what's going on. So there were increases in both the cost of goods sold, you can see 14%, and we had an increase in the operating expenses of 21%, which led to that decrease. So, where's the question? Obviously, cost of goods sold. What's going on there? What went down? We just took a hit on that by $45,000. So let's try to find out what was going on there. Could it be that we just had high increases in our products? Maybe it's just our product mix. Who knows? But now you can ask the question. Okay, now the company has asked you to do a vertical analysis. And specifically, they're asking you to do a vertical analysis for the comparative balance sheet of one of its retail stores. Now, if you notice here, there's no indication of expressed in thousands or anything like that. So we'll be dealing with the actual numbers of this retail operation from the Clover Corporation. So let's take a look. So as you can see here, we line up the items by year, as we've done before. And we're going to now take the percentage of each item on this balance sheet and compare it to the total assets. So we're looking now at the asset section, and we're seeing what percentage cash makes up of the asset position for 2019, and then we're going to do the same for 2018. And you can see here that we see that there is an increase in cash of 17% from 2018 to 2019. And when we look at this for each of the items, we can see that there's pretty much a constant increase among all the assets. When you look at it on a relative point of view, you can see here 25 to 26 on receivables and just a few. So the big story here is we had a nice little increase in cash from the operation. So let's take a look at what happens on the liability side. And we can see, again, very little change is going on here, except when you notice, right, oops, let me back that up. When you look at the retained earnings section, you can see that there's a significant amount of increase from retained earnings, which again is great. So when we look at it in total, we can see that the total assets and liabilities and owners actually increased from 2018 to 2000. So the company is growing. Okay, that's what that's telling us. It's growing. And again, what we're finding from this and what we can see from this information is that it's growing from a operations point of view, from the retained earnings. So now the company has asked you to do a trend analysis. Okay, the company wants to provide operating data on one of its golf facilities expressed in thousands, and they're wanting you to do a trend analysis. So we're going to look at how does the numbers increase over time. Well, we can see it in an absolute way, and we can see there's some growth there, but we'd like to be able to see how it's growing relative from the base year. So the way that we do that is we take the base year, which in this case is 2015, and we're going to compare it to 2016. So we take 2016 minus 2015, and we can see here that we come up with 171,000. And then from there, we're going to divide it by the base year of 2015. And as you can see from this, we get a 9% increase. Now that, again, people tend to get confused. They think that I compare it from this year to this year, and then from this year to this year, and this year to that. No, that's not the way we do a trend analysis. It's actually always from the base year. So in this case, we're looking at a 5-year trend, or we could do a 3-year trend, but we always do it on the base year. And as you can see from this, we increased by 9% from the base year. Then we increased to 16%, 23%, and then 32%. The point being is that this has been the growth over the past 5 years for this company. Not bad. And then at the same time, we look at the increases in expenses over that same period of time. And then we look at the increases in net income, and wow, we can see that there's been tremendous growth in net income. Very revealing and a very good way to analyze trends over time. And then if we graph this, we can see graphically, visually, how the sales have increased at a faster pace than expenses, which is providing us with a greater margin, and that's how we say it in accounting, a greater profit margin or operating margin, or even net income in this particular case, over time. So this particular operation, this golf facility, is doing a super job over time. So with that, we're going to wrap up this section, and I'll see you in the final review section, and where we're going to try to pull everything together and review, what kind of things we've learned and how we put that together to really, again, read, interpret, analyze financial statements. See you in the next segment.